So I think Netflix is perhaps one of the most interesting stories at the moment, because most of these big cap tech companies, these mega cap companies, are beneficiaries of the network effect. So a company like Facebook is clearly the dominant network winner in its segment. But in the world of streaming, it's far more competitive. So the real question that investors have to make when it comes to Netflix is, will they be the dominant network winner, or will the competition make it very tough for them? And a couple of pointers, I think. Often network winners start to emerge when they can achieve a 20 to 25% share of the market they're in. And Netflix already has a 30% global market share in streaming, with about 167 million subscribers, which is substantially bigger than all the US cable companies put together, for example. So I think they're in a good starting spot.
One really interesting question when you talk about market share and how to get there is, if you look at some of the newer entrants, they have this big back catalogue of content. Netflix is a dominant spender on fresh content. Is that going to be a very key metric 2, 3, 4, 5 years from now, do you think? How much of their total revenues these companies then reinvest in original content?
Yeah, I think it's a critical metric. So Netflix announced they're going to spend $17 billion on content this year, which is up from an expected $14 billion, so they've raised the bar again. We've not yet seen a year where Netflix has spent less than they've said they would spend. And that, of course, means that they're remaining unprofitable. And so this is the key critical question. Can they outspend their rivals to build the network up and ultimately then get leverage from that spending?
Intel numbers are very strong. Market impressed by what they saw. What's the key read across for a European company, or for the broader tech sector?
Okay, so the key with the Intel numbers, the real big standout was cloud growth, which was 48%. They saw 48% growth in their cloud chipsets. So that really points to continued very strong growth in demand for cloud business. So for next week, Microsoft, Amazon, their cloud businesses will be very interesting to watch in that respect.
Concentration risk is a big topic in tech. Alphabet has become the 4th U.S. company in history to reach the $1 trillion club, and now the tech giants make up, I think, about 15% of the S&P 500. Is this a risk?
Well, I think it depends how you define technology, because if you were to go back 5 or 10 years, I would have been investing in companies whose sales were all technology sales. Nowadays, the big mega cap companies don't have technology as their sales. Facebook and Google sell advertising. Amazon sell consumer products. So I think it's a little unfair to say that, that concentration sits in technology. It's really a sign that the world is developing into a place where the use of technology is critical for all business models.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.